Good afternoon, everybody. This is Lucid Investment Strategies. Obviously, I'm here with Sawcruhteez, and we are in Chattanooga, Tennessee together, along with Leah, Wald, who will pop in and say hi. We're working on a bunch of Lucid projects this weekend, but there's so much going on in both the U.S. stock market and with Bitcoin, obviously, that we wanted to take about 30 minutes and just quickly go through what we're seeing. This is some critical stuff, folks. Critical in the crypto world, critical in the stock world. We had a big move up in gold. It's critical in the gold markets, but we're not ready to talk about that. But the biggest thing is, as you all know, we've got a webinar tomorrow from 12 o'clock to 4 o'clock on a technique that is wonderful for picking tops and bottoms of major moves. We're going to look at 50 different examples of things that are going on right now with some very large indexes and with some very important currencies and with a lot of very surprising individual stocks that are indicating either major lows or major highs terminating. And we won't have time to go into those today, but please, anyone interested in learning about the Selgin trading system, which is the Megaphone system and the broadening top or broadening bottom system that have been used now for 50 years by some top traders. We're going to teach that tomorrow. It's $150. You go to lucidinvestmentstrategies.com and you can sign up for it. You'll get a 38-page written review of everything we are going to be talking about in the meeting. So we hope you take a lot of notes, but you're not going to have to. You can take notes on top of what Sawcruhteez has been working weeks putting together for this particular webinar. So we just wanted to start off with that. And now what we're going to do is just talk briefly about some things we're seeing. And the two of us don't agree on everything. In fact, we disagree on a lot of things, just the way Tone Bays and I disagree on a lot of things. That's beside the point. What we're going to do is present evidence for what we are individually seeing, and then we can try to resolve what it could mean. But if all markets are right now giving big signals, I think most of you heard that we have now gone 50% into cash in the U.S. stock market. We went 20% long X in the Bitcoin market. We then took profits on half of that and up around the 8,800 level. And since then, we've dropped all the way back down to 8,000, and we're struggling. And I think we're struggling at a very important point. So it's a rare occurrence when many markets at the same time are signaling massive potential moves, either up or down. It means that at the macroeconomic level, things are happening. And we're all guessing at what that is. All economists are, all central bankers are, all finance ministers are. Nobody knows what the answer is, but what we try to do at Lucid is to keep people informed of what we are seeing asset class by asset class, short, intermediate, and long term. And that's what we're going to do today with two asset classes, Bitcoin specifically. We might veer off a little bit into Ethereum and a couple of other things, but probably just Bitcoin, and then the S&P 500. The NASDAQ is doing its own thing, and we're going to be talking about the NASDAQ in the webinar in great detail because it has a massive top formation right now that's breaking down. The S&P, similar. The Dow, not so much. But when you take a look at all of the individual pieces, I think you'll see what we're talking about. So right now, what I am going to do is I am going to just quickly pull up the Bitcoin chart. And we are looking at the weekly Bitcoin with this very unusual pattern developing. What that pattern is this trend line used to be the phase 2 trend line, phase 2 line of the hyperwave. And for those of you that have followed us, you know that that's what this is. It started all the way down here below 1,000 and now is up around this 8,500 level. It broke right here at 6,000, which ended the phase 2 line from the point of view of it being a phase line, but it continues as a very powerful angular trend line. And we can see that on the daily and the weekly. Here is the weekly. We broke above it. We came up to a 7 on the weekly sequential. We did not get above the setup trend line. And then we flipped to this week, which has only got another 2 days to go in it. And we did penetrate the setup trend line, but we closed above it, or we are now well below it. And if we close anywhere around where we are now, we are also going to be back down to or below this trend line, and we will be flipping to a 9. And as most of you know that follow tone, that is a sell signal, at least for 1 to 4 weeks, and maybe much, much more. So that's the overall thing we wanted to talk about today. And I'm going to turn it over to Sawcruhteez just to see what he is thinking about this time period, and flip it to any other time period you want to.
All right. Well, I sure appreciate it. And I also appreciate you having me as a guest to your home. I got to say, you and your wife have got to be some of the best hosts around. I flew into Nashville and was taken straight to Morton's Steakhouse, and we had a fantastic meal together. And then his wife has been cooking fantastic Italian meals for me on homemade bread every day since I've been here. So that has been quite the treat, and I am sure happy to be here and happy to take a look at some charts. I think Tyler analyzed the weekly very well there. I am also looking at kind of these same areas of resistance. One thing that I found very interesting, we can zoom way in to the 30-minute and look at how well this trend line has been acting as resistance. We keep coming up to it and wicking down, wicking down. To me, that is just amazing and tells me that this is a very important barrier. And right here, it looks like it is holding strong as resistance. That is a very short time frame, so take it for what it's worth. I'm going to pull up a blank chart so I can go through the things that I've been looking at. First thing we can take a look at on the 4-hour chart is a potential Selgin setup. For anybody that has been following along for the last week, we had a 2-part blog that covered the nuts and bolts of the Selgin trading system, and anybody that listened to those may be seeing one form right now. So let's go ahead and take that off, get everything out of here, just the price. And we see right here that we could actually be looking at a broadening bottom pattern. So we've got a 5 down here. We've got a low between a higher low and a higher low. That gives us the 5th point. Up here, we've got a potential 4, which is a high between a lower low and a lower low. Coming over here, we take a look at a 3, we've got a low between two higher lows. Up here, we've got ourselves a 2, which is below the 4. Notice how the 2 is below the 4 and the 3 is below the 5. So everything looks good there. And now we give ourselves a 1 down in here. This candle right here is a low between a higher low and a higher low. So when this candle, let's see where we got our 5, right here. So when this candle closed right here, that gave us the Selgin broadening bottom with the 5th point, which is potentially an area to go long off based on the Selgin trading system. So based on that, we are looking at a potentially bullish broadening bottom, which you may wonder, how could this be a bottom after such a big increase in price? And really, if we look at right here, we started the point 1 and 2 was in the 87 to 8,900 area. This came down to 8,000. That's a 10% decrease. So that, in a sense, could be the bottom of this correction. Now, what I will be looking at for confirmation is going to be exponential moving averages and trend lines. So let's take a look at the 50 and the 200 EMAs. So I always do the same color so I know which I'm looking at. Let me get those set up very quickly. And we can notice, actually, this is what I was wanting to look at first, was the 9 and the 50. So maybe a week ago or so, we were looking at this area in here where we were drawing a trend line that was making up a bit of an ascending triangle. And let's get that out of here and take a look at if this is connecting to any other important points. Kind of looks like it is, so I want to leave that in. So now we've got our trend line that we have been watching over the last, let's see, couple weeks here. And when it came down to test this first time, we were watching the 9 EMA and the 50 EMA to see if they gave us that bearish crossover. Now, let's see if we can hide the price so that you guys can get an idea of how close that came right there. Came very close. Price did fall below the 50 EMA. It was trying to roll over, found support here, and then it rallied. And then we got a similar action here, come back down, fall below the 50 EMA. The 9 fails to make that bearish crossover. We quickly bounce back on top. And that is an area where I was actually looking to enter long. And we are now getting this same sort of action. We have pulled back here to test this bull trend line, and the price has fallen below the 50 EMA. The 9 has started to accelerate down towards a bearish crossover. However, look what happened. The price rebounded and is now above the 50 EMA. There's 43 minutes before this 4-hour candle will close. If it closes above that 50 EMA, that's the first indication to me that we are not going to get that bearish crossover. If it closes above and then gets back above the 9, that would be further confirmation that this is a potentially a good bottom for this sell-off. So that is very, it's too early to really say anything very confidently based on what we're looking at here. So definitely in that circumstance, I want to zoom out a little bit. So I'm going to get another EMA pulled up. We're going to zoom out to the, let's see here. We're going to zoom out to the daily and take a quick look at the 3-day as well, and then we will move right on. So I'm going to set this to the 200. And now let's see what's going on the daily. So here we get an idea that potentially that trend line could be adjusted. Maybe it should be connected to this wick. potentially could say that it has already been violated based on this time frame. The trend line that I originally had drawn was right about in here. So it is very much so testing it on the daily as well. And that's the big knock on trend lines, is that if something happens, you can just make a small adjustment. And that is something that I am fully comfortable with, and realizing that, sure, sometimes my original trend line was not accurate. And sometimes when it looks like it was breaking down, I just needed to actually draw it differently. And to me, that's not a problem. A trend line, to me, represents a changing of the tides. And that is very important to me when we've been following along a steady rate of return, a rate of increase, and then all of a sudden we start to either flatten out or go in the other direction. That tells me the tides are shifting. And if I have to adjust my trend line once or twice before I'm actually right about the high tide coming in, then that's just fine. It's still a very reliable indicator for me. So we noticed that we did close below that 9-day EMA. Look at how much it has shied away from doing that. We have only done that on one candle. There has not been 2 consecutive closes below this 9 EMA during this big run-up. The last time we had that was down here during the consolidation. Since we broke out of the 5,800 range, we have failed to stay below the 9-day EMA. It would close once below, big rebound. Closed once barely below, and then it rebounds sharply. Closed below yesterday, and now we are rebounding. We're already back above it, and I think that candle will close. I'm having to adjust for time zones, about an hour in that'll close in about 40 minutes for the daily, I think, based on Eastern time. So keep an eye on that. Are we going to close above this 9-day EMA? And are we also going to avoid the bearish crossover on the 4-hour? So let me add a 3-day chart. I really like looking at the 3 days in between the weekly and the daily. So I will be pulling that up now, and this is what I have been keeping my eye on, is this golden cross that did just occur within probably that last candle close. We've got the 50 EMA crossing above the 200 EMA on the 3-day chart. So for me, that is very important. We've also got this 50 EMA turned up sharply, and the 200 EMA has just started to turn up as of about May 13th to 16th. The problem is the price is very overextended. If the price was close to this golden crossover, I would view it as a huge buy signal. When the price is this far away, then I am more expecting a period of consolidation or correction. As you hear Tone talk about, he wants to see price pull into golden crosses or death crosses. And I either want to see it pull into or be right near it as it's occurring. When it's this far away, it is not necessarily a good signal to enter, but it is something that I want to keep my eye on as potential areas of support and resistance. So that is what I have for you guys on the Bitcoin price chart. Here's maybe another way to take a look at that trend line. It is a little bit finicky right now, but it is definitely something that's important to me that I will be keeping my eye on moving forward. So should we dive into Ethereum or go straight to the stock market?
I think we'll go right to the stock market. We'll do one on Ethereum. I'll just quickly pull up an Ethereum chart, and it looks almost the same as Bitcoin. It's very unusual how similar each of their periods are. This is a 3-day chart on Ethereum, and you can see the long-term moving average is all the way up here. We did break out above it, and that would be the
200 EMA.
That's the 200 EMA. So we had been way below it. We've come all the way back to it. Now we've got 5 periods in a row above it, and you can see everything else is moving up. Going back to Bitcoin just for a second, both of us have been talking about the fact that if there is a correction, we believe this area around the 6,000 area can, will, and should hold. And then you are much closer to the cross, the golden cross that Sawcruhteez was just talking about. Also, you've entered this zone between 6,300 down to the 5,800 level. We will probably be buying again down in the low sixes if that occurs. We are still long 10%, which is 50% of what we put in, which was 20%, which were all bought in the off this candle basically, and this correction back down between 6,800 and 6,200. So we're either ready to go to higher highs or we're ready for a very significant correction. That's why we thought it was so important to talk about it. Now, the next thing I want to talk about, which affects,
if I touch on that real
please.
quickly, is if I could take over the mouse. I'm actually seeing Ethereum as significantly different from Bitcoin, which I think is actually kind of a bit of a divergence happening that I've been keeping a close eye on. For example, we're looking at the 3-day. The 50 and the 200 EMA just crossed with the price well above. We're talking, what's that, 40% above, something like that. And let's take a look at this area in 2018 that held up the price at about 6,200. We are well above that on Bitcoin. So that paints one picture, whereas if we pull up ETHUSD, we are not even that close to getting that golden cross. We just exceeded the 200 EMA on the 3-day chart. And it has maybe just started to flatten out. To me, that is a much different picture than already having a golden cross and having the price like 40% above it. The other thing that is significantly different to me is this area, Ethereum in 2018 supported above 350 and about 400 were its major areas of support. Let's take a look at even the lowest area of support from 2018, and the price is significantly below it. That's at 384. We're down at 261. So we've got Bitcoin way up here. Here's the area of resistance at 6,000 right here. Bitcoin smashed through it, way above a golden cross. And now we've got ETHUSD not well away from a golden cross, weeks away from a golden cross, well below the major area of horizontal support from 2018. So to me, this is a much different picture, and it's a very, very important picture because if Bitcoin really is entering the next bull market and it really is leaving some of these alts behind, then that is something that is extremely important from the market maturing perspective and a belief or understanding of how far the next one could go. Seeing Bitcoin leaving alts behind, that is different than everything that happened throughout the bear market. In the bear market, when Bitcoin pumped, alts pumped harder. Every time there would be a dead cat bounce and alts would pump harder. It sort of conditioned the market to believe, to be super confident in that if Bitcoin's going up, well, then I want to buy alts. That's what the market was conditioned over 2018. Every time Bitcoin went up, alts went up more. That's not happening now. And right now, we're looking at what could be a potential legitimate bottom opposed to a dead cat bounce. So seeing that Bitcoin is now taking off faster than most alts and most large cap alts, to me, is extremely important and does paint a bit of a different picture than generally we're used to seeing moving in tandem. And now that is not necessarily happening anymore. So it's something that I'm keeping a very close eye on.
Yeah, very great points. Very important. Total dominance of the market cap is going to determine how far this is going to be able to go if it keeps going up. And also, if we go down from here, I would expect market dominance for Bitcoin to continue to increase. This is the one that affects 50 times more people than crypto and Bitcoin. This is the S&P 500. And the S&P 500, as you see, over the last year and a half, has a triple top, basically. We had just not too long ago, I'm going to take this to the weekly. It was only about 5 weeks ago, we hit all-time highs in the S&P after hitting all-time highs back in September of last year and all-time highs at the beginning of 2018. But in each of the previous two cases, they were not able to continue. I was convinced this one was going to continue, and so far it has not. And not only has it not continued, but now the price has dropped back below the short-term moving average. The short-term moving average is turned down, and now, as of this week, we have broken through the intermediate term moving average, which on this particular chart is a 50 EMA. And way down here is the massive support 200-week EMA, which we bounced off beautifully back in late December. One of the reasons that we bought in 50% long into this move and then 100% long as we took out this overhead resistance. We are now back below that neckline of an inverse head and shoulders. That is also true on the other indexes, particularly the NASDAQ and the NASDAQ 100. So this is Friday. We've only got 30 more minutes, and then the markets close. Let's just take a look on a daily basis what we're looking at. We've got gaps on the way down here, and obviously new daily lows. We're coming back to a little bit of support, but this is a very clear daily head and shoulders. Left shoulder, the head, the right shoulder, the neckline, we've broken it. That gives us a target on the downside of from 2,800 up to the last peak, which was 2,950 or 150 points, which takes us down to 2,650 approximately, which would take out these previous lows and may start something much bigger. Way too early to tell that, but I think it's very important for people to be aware. Now, going back to the weekly, I did want to point out something that we'll talk about tomorrow, which is this pattern. A 5, a 4, a 3, a 2, and a 1. This is the perfect Selgin setup for a major trend reversal from a major top to something, either an intermediate term decline or something much larger. And because of that, and because we will show many, many examples, let me just take a look at a couple of very interesting things that are happening. Here's one of the greatest companies on the U.S. stock market. This is M, Minnesota Mining and Manufacturing, and you can see how it is just in free fall. And this is the beginning of 2017, 2018. So we're talking about new lows going all the way back to the correction of 2015 and 2016. We're finding this over and over and over again with a huge number of companies. General Electric, we've talked about for a long time, but notice that we've got a bottom forming using the Selgin trading system way down here at below $7.50 on something that was also a hyperwave and is still in the long phase 7 of a hyperwave, and now we're getting a buy signal using the Selgin system. And again, we're running out of time right now, but I was also very interested in this chart, one of the grand dames of the U.S. economy and the U.S. stock market, which is Boeing. We've got a phase line down below this action but that's not what I'm looking at. What I'm looking at is a 5 up here, a 4 down here, a 3 up here, a 2 down here, and a 1 here. A massive sell signal all the way up at $440. So we will use those and many other examples. Please join us tomorrow from noon, 12 o'clock Eastern time until 4 o'clock. Sawcruhteez and I will go through the entire list, explain how it works, where you put your stops, how you trade them. And then, as I say, when you sign up for this webinar, we will email you the 38-page summary of what you're going to hear tomorrow, including all of the examples. We've probably got too many examples for a 3 or 4 hour show, but we're going to squeeze in as many as we can. So with all of that, thank you very much. Sawcruhteez, any last comments on the S&P or anything else?
Yeah, just the last thing to keep an eye on, personally for the S&P, is the yield curves have been inverting, which is not necessarily too important on the shorter time frames, but now we are seeing it happen on some of the higher time frames. The 10-year interest rate just went above the short-term interest rate on the 1 month. If I am remembering that correctly, that is a big, a very important indicator. The next one up would be the 20. If that one inverts, that would be a very big indicator that the economy is entering a sort of a gridlock and that liquidity will be drying up. If that is happening alongside these topping formations, that is more proof, not proof, more confirmation that this could potentially be rolling over. So that is something else to keep an eye on. I really appreciate